Squared takes up 2 spots. We should charge them for the bandwidth. Nobody's drinking. I'm sure Bob will be drinking. Let's see. Everybody, we're going to wait a couple minutes, let some more people join in. A lot of traffic out there today. I'm looking over the tollway in Dallas, and traffic is traveling at 68 miles an hour today. So we have Dr. Heath Jones joining us. It's a privilege and an honor. You're actually unmuted. So I'm going to put you on the spot, Heath.
What's that?
So I'm waiting for you guys to respond to me when we're going to talk.
Hutch responded yesterday.
No.
Yeah, because I sent an email and I was okay with 3, but he had something to do at 3:15, and they were waiting to see if 4 o'clock worked for you yesterday. But we need to make this happen. I'm all aboard.
I'm available all day tomorrow for you guys. I will block my entire day for a 15-minute discussion with you guys, with H Squared.
Excellent.
So anytime between 9 p.m. and 4 p.m. tomorrow, just send me an invite.
Excellent.
But you need to do it before
good.
this call is over, because I'm sure everybody's going to want to talk to me, because it's going to be a very interesting call. Right? Hutch is like, Hutch can't even control himself. But no, I do want to talk to you guys. I know what you guys are looking for, so yeah, that'd be great. So we got a lot more. Hold on, I'm going to mute you, man. Okay, so we have a lot more people joining. We give it a couple more minutes. So Anna Riley's going to be with us today. Jeff, I'm getting some feedback. I'm not really sure why. Cindy. It's great when Jeff mutes everybody, including me. So Hannah Riley's going to be joining us today. She should be on in about 15 minutes. We're just trying to time some stuff. The interesting thing is I put together a slideshow that we'll go over in a couple minutes, just a PowerPoint to kind of show what I think the state of the economy is with respect to all of us and what we're looking at. I literally did not have Rob or Jeff do any of their graphical animation to it. So this is the Merrill 5-slide slideshow, just talking about some, well, we always talk about key performance indicators, just some KPIs of the economy, and then some general thoughts on what the law firm is seeing as far as movement in deals. And then I'm going to let Cindy lead with the not really interviewing, but the talk with Anna, because they're both very successful ladies in real estate, and I thought that would be good. You guys know me, I'm always going to jump in and ask questions because I can't help myself. So I'm going to unmute Cindy. Hopefully we won't have any. Cindy, you want to unmute yourself? See how we sound?
Okay.
Oh, good. So Cindy, are you going to be ready? I'm going to go over a slideshow. Cindy, are you going to be ready?
I am ready.
Yeah, so I'm going to mute you again because you're the one who's got the feedback. So I'm fortunate enough to have Heath Jones, who's a doctor of headphones, point to his headphones like this, saying, Merrill, you need your set of headphones. Okay, I'm a lawyer, not an AV guy, and Rob, who is down the street from me right now, could have driven over here and given me some headphones. What are you pointing at now? You know what? Hey, Kim, well, hold on a second. Kim, do I have headphones up there with a plug? So I'm going to share my screen, guys, and we're going to try these headphones real quick. And I'm staring at Dr. Heath Jones to see if I have his approval Okay, yeah, I know. These are iPod headphones. Heath, are these going to work? I didn't even know they made headphones with wires anymore. These are not going to work. Okay, this is what happens when you have your wife get headphones, okay? She grabs the headphones, and I've got a PC. So we're not going to have this discussion right now. Okay, guys. So we are still working from home, most of us. And as you can see, I cannot wait to get back to the office. So I'm going to share my screen with you guys and give you a really quick heads up on kind of how we see the economy right now with respect to what we're doing. And then when Jeff gives me the A-OK, I'm going to mute myself and then let Anna and Cindy talk so we don't have any of the feedback. And I'm also going to turn on the chat real quick so I can see. If you guys have any questions, great. Are headphones good for the ears? My goodness. If you have any questions other than headphones and me not being prepared with headphones, ask them. Anna has a lot of interesting information to go over. I think she's got a great story, quite honestly. And we're also going to see what she's seeing in the market because she does her investments in areas that are outside of some of you guys' normal markets. So I'm going to share my screen real quick, and I'm going to give a, let's say, slideshow. 1 second. Let me actually try to share screen. There we go. So Heath, can you see my slide? Yeah, you're my barometer now because I'm going to pick on you. So I tried to be a little funny here, and I think Jeff just let Anna in, so I'll go over these fairly quickly. So this is my version of trying to be funny, but I believe we are starting an economic comeback, whether it occurs today or tomorrow or the next day. I don't think it's going to be that quickly, but I'm hoping for a VU versus a U, and I'm hoping we don't have a W, but we're seeing some good things. So I gave you guys a nice picture. I thought it was pretty funny. So just some highlights. PPP, this is interesting. I have had some clients recently ask, upset because they didn't get their PPP. I don't know if you guys know this or not, but there's still $147 billion available in PPP money. If you have not applied for it and you think you qualify for it, you should apply for it. Just for the record, I applied for 3 of my companies. They all qualified. And so I really think if the opportunity arises, you should qualify, you should apply for it. An interesting note that I didn't have on this particular screenshot, and by the way, this is as of today. So there have been almost 4.6 million businesses that have applied for loans with 5,455 different lenders. The average loan size is 111,667. Nowhere near what I was hoping to get, but that's nice. The first 2 weeks of the applications for PPP, the average loan size was $233,000. And you guys may note that there were several very generous people that companies decided to give their money back because they thought maybe they didn't qualify for the $5 million that they were awarded by government. So long story short, for those of you that think you need PPP money, and quite honestly, any of your friends whose businesses are suffering and haven't applied yet, they should apply. And if you have applied, you haven't heard anything back, I can only tell you, you should be contacting your lender every single day. Annoy them to death until they do the loan. That's what we did. I didn't personally do it. I had one of our staff people do it. Another key point is I don't play the market at all. Well, I have a little bit I play in the market, but I don't really follow the market. I don't look at the market as an indicator of how I'm going to invest. But the rest of the world does seem to use the market as an indicator. So just to put things in perspective, the market thinks the economy is coming back. You can actually see, I'll do this with my mouse, you see the line, you see the average going up. And what's also interesting is the market's only down 1% from its peak, okay? and it's up over 35% from its low in mid-March. So the market is coming back. Yeah, there's ups and downs, but you can see the market is coming back. So Wall Street has, at least it appears that Wall Street has some confidence in at least a portion of our company coming back, a portion of our country coming back. And don't worry, guys, I only have a couple slides. And then you guys have all seen the unemployment. Unemployment is high. There's no question about it, but it's very interesting. And when you see it in a graph, it's also nice. It's been dropping. The number of claims have been dropping each week, which is a good sign. We're still at, I think, over 14 or 15% unemployment, but it's dropping. The new claims are dropping, which is very encouraging. I mean, we'd all like it to be near zero, but that's never going to happen. But that's an encouraging sign. It could be getting worse because payments haven't been coming through. No payments have come through for individuals. And, you know, there are companies that have just closed down. We've all seen them, even in Texas, which the economy is on fire here. On fire. It's on fire in light of the situation we're in with the pandemic. It's been doing very well. So this is just another indicator that we're looking at and that I look at that justifies, you know, going after deals, looking at deals. And then I'm going to give you guys, this is Texas. I know that probably 50% or more are not from Texas that are listening in, but there's about 80% of you that do invest in Texas and in Texas deals. So this is just a real quick snapshot as of kind of this week. It's not through today, but it's through the end of last week, kind of where Texas sits. So unemployment claims are 2.4 million. That's a big number, but keep in mind we have over 29 million people in Texas. So that doesn't mean all 29 million people are employed, obviously. Our unemployment rate as of, I believe it was the end of May was 12.8%. Which is very high for us. Typically, we're averaging 4 or 5%, but not the 20 or 21% that people were projecting. And then, look, this goes hand in hand with what we would expect when you shut down a state. Our sales tax revenues are down 13.2%, far, far less than places like the East Coast that are down 50, 60, 70%. So Texas is actually looking pretty good. And then finally, before we get Anna on, I'm just giving you guys some real quick highlights, what we're seeing personally at our firm. So I mentioned with someone earlier, with Emily, we've had we've had quite a few reinstated offers or purchase and sale agreements being kind of started back up again, especially in the last 2 or 3 days. Deals that everybody thought were completely gone have been reinstated. These are from March and April. That's very encouraging. I've had quite a few people starting blind funds. And most of you guys have listened in before. It was one of our biggest attendances about a month ago when I discussed blind funds, but you know, funds that people are putting together in anticipation of finding that good deal or good deals. And so what people are trying to do now is they're trying to capture some of the dry powder that's out there. And by doing that, you put together a blind fund, you have your parameters put together, and you go out and find the deals, but you're not as worried about raising the capital because you've already done that. And we've also had quite a few people put together, or we're working on for them, a fund of funds. So we put together a fund, 2 million, 3 million, 4 million, 10 million, whatever it is. And rather than that fund go out and find multifamily, it goes out and does significant investments in other syndicators multifamily. So it may have parameters of 500,000 to $1 million per investment, depending on how much money they raise, and they try to diversify the investments. And so then they're truly asset managers, meaning they're money managers. They're managing the money within the fund of funds. But that's something that has become increasingly popular, at least with respect to our clients. Lots of LOIs have gone out in the last week and a half or 2 weeks. So again, we use that simply as a sign that our investors are being proactive. They're seeing deals. I can tell you personally, I look at the deals that our clients get in, and I'm looking at the values. I've seen quite a few pocket listings pop up in the last I don't know, 2 weeks, 2.5 weeks. And these pocket listings are trading at between 10 and 15% below what I think market value is. And they're not necessarily bad deals. A lot of this is CMBS and bridge loans that have terms right around now or in the next 6 months. So they're being proactive and moving these properties. So there are deals on the market, and you guys just have to look for them. The pocket listings are obviously going to be the better deals. There's also some distressed stuff on the market. Don't believe every report you read that says, everybody's collecting 95% or higher of their rent each month. That's not happening. There's some that are, and there are markets that are, but there are also some that are not. And depending on why they're not, those could be great opportunities. So I am now going to stop sharing, and we're going to put on Anna, Jeff. I can't see Anna. So hold on, there's
I'm
Anna.
here, Meryl. How are
Hey,
you?
how are you doing?
Good.
So this is Anna Kelley. We're in the presence of greatness. She is the REI mom. I don't know if she actually birthed the entire REI, term, but she refers to herself as REI mom. I joke around a lot. So she is the mom of REI. We're very excited to have her on. She's got a great story, a fantastic story. Anna and I have gone back and forth and been at some events together, and I'm very impressed by what she's put together. And I think it's actually good for her and Cindy to talk about her story. For those of you that don't know me that well, we do promote WIRE Women in Real Estate. It's a group we started in Dallas and unfortunately put it on hold during COVID. But it's fascinating to see how many women have gotten into the multifamily and development side and are just doing fantastic. And I follow Anna, I don't want to say religiously, but I follow her very regularly. And we have very similar values and beliefs. And I think she has a great story. I want Cindy to initially talk to her only because I like it when women are asking questions specifically towards women. You're gonna answer better with Cindy than me. I will jump in if I think something is really good, but I'm gonna try to hold my comments back. I'm gonna put Cindy on, and then obviously Cindy's gonna ask you some questions in general, but it's kind of where you were before real estate, which I think is interesting, and then you started dabbling in real estate, and then you decided to make the big plunge, and how you've gone from where you were to where you are now, and still a mom and an active mom. And I have a wife with 3 kids and know that even without being employed outside the house, it's very, very busy. And then on top of what you're doing. So Cindy, unmute. I'm going to mute so there's no feedback. I'm going to wait till Cindy's on. Cindy, can you speak? You have to unmute first.
Yeah, it wasn't allowing. I'm having a little technical difficulties. I'm on my phone because the computer. So can you hear me now? Yes. Okay. And Anna, are you there?
I'm here. How are you?
Good. It's so nice to see you.
Nice to see you too. I'm honored to be here.
I'm honored to interview you.
Thank you.
So I'm just kind of free flow here, and I'll ask you some questions, and yeah. This will be fun. So Meryl kind of touched on this, but before you got into real estate, what were you doing?
So I was really just climbing up the corporate ladder. I had started out my corporate career at Bank of America. I was in private banking, and I was a financial relationship manager where we handled the wealth of the top 10% of the wealth in our bank. And we taught them about retail investments, stocks, bonds, mutual funds, insurance. And I was just climbing up the corporate ladder, thought that I was, going to just have a career. And then I left Bank of America and went to work for AIG, training their insurance agents on how to integrate variable products within their insurance company. So variable annuities and variable life insurance, and really was in product development, happy to, continue to move up in the company. until I had a baby. And the first time I had a baby, I decided maybe I'm going to stop trying to climb the corporate ladder and be home with my kiddo. And it just changed my entire perspective on, what I wanted to do in life.
So what made you go from that to jumping into real estate?
So I had some very wealthy clients, Cindy, back when I had started out that I was talking to about retail investments. And I had an older gentleman laugh when I told him that we could make him, 12 to 14% returns, back in the late 90s, because he made a lot more in real estate. And I thought, I've never heard of anybody that owns real estate or investing in real estate. I grew up in Section 8 housing, so I didn't have family that had wealth and had real estate. And all I knew is what I had been trained in college and, as in my training as a financial advisor. And so it kind of piqued my interest that if really wealthy people have real estate, it's probably something that I should consider and try to figure out how to get some real estate. So that opened my mind to real estate. And then long story short, Cindy, when I had my first child and decided I really want to be home with my baby and I need to figure out how to replace my high paying job at AIG, I saw lots of house hack shows that talked about flipping houses. And I was convinced that flipping houses was the way that I was going to stay home with my kids. And that's what I started doing.
And so from there, tell us a little bit about the trajectory to now.
Hold on. You know me, I got to interrupt. Anna, tell us about your flipping houses. How many houses did you flip?
Well, I flipped one when I had a 3-month-old baby, and we had no idea what we were doing, Meryl, and we lost $10,000. We held it for a year. We could have lost a lot more, and I'm thankful that's all we lost. But during that flip, my husband also lost his job. And so we had 2 mortgages, a car payment, big 6-figure school loan, and a new baby. And he said, we're never flipping another property again. So it took me a few years before we ever flipped another property again.
Well, so it's funny you say that. So myself, my wife, and Jeff, who's my COO on here, I was a hard money lender in a different life. And we decided, actually, Jeff and my wife decided to flip their first house. And I wanted to give all sorts of advice, but nobody wanted to hear my advice, wanted to do it on their own. And my wife was sitting over to the side, and I don't even have to ask her if she would ever flip another house again. But I think Jeff's nodding his head. I'm pretty sure it was about 25 grand they lost. But I look at that, I don't look at that as a loss. I look at that as they got their MBA in single family real estate. I mean, we went on and used other people's money. Afterwards, but it's better when you use other people's money. We bought 9,500 properties. And we essentially flipped them. We bought them, rehabbed them, leased them, property managed, and then in various tranches were sold off. But you learn a lot, and especially in your situation. I already knew your story, but especially your situation where you got a baby, not even a baby, like an infant, and your husband is out of a job. And flipping a house is not, I'm just going to spend an hour or 2 a week on it.
Yeah.
Is that the only house you bought? Because I think you've bought some more since, right?
Sure, I've bought a lot more since. So, we kind of dabbled. So I speculatively invested in, a single family condo, and then we kind of house hacked a house in a area that we thought was going to go up in value a ton, and we were investing for appreciation. Then we did this flip, and my husband said, we're not doing that again. So, I had done the corporate job. I had done real estate and thought that we weren't very good at it, or at least he wasn't going to let me do it again. And so we thought, the best next thing is let's become entrepreneurs and start a business. So I was convinced that if my husband just opened his own practice, he wouldn't have to be laid off again like he had been. And he would eventually make enough money that I could quit my corporate job, give up my income, and be home with my kids. So Meryl, we moved from Texas. I'm from Houston, and we moved from Texas to Pennsylvania, where he's from, in 2007 to start his chiropractic business. And in looking for properties, we figured it was pretty expensive to lease space. So we were at the height of the economy before the crash. And what we did was we found a building that had a commercial space on the bottom, and it had tenants on top and some garages in the back. So we bought a commercial space for him to practice in. and really only took on tenants because we thought it was a smart way to kind of cover some of the expense. And then because we sold a big house in Houston, and AIG let me work from home on a trial basis, but I knew that I could lose my job. My husband's business was going to take some time to take off. It wasn't smart to buy another house. So we bought a 4-unit apartment building and we house hacked it. We lived in 1 unit and rented the other 3. So that was my next foray into investing and taking on rentals, just really as a protectionary move, not because I wanted to be this real estate investor.
Very cool. So from there, how did you expand into more multifamily?
So in 2008, late 2008, early 2009, we had experienced the Great Recession, and AIG almost collapsed. Most of the financial markets almost collapsed. And I was about to lose my job. I lost about 2/3 of my 401k in a very short period of time. And the only thing that was stable for me was my small rental properties. And so I thought, you know, I'm about to lose my job. I had been trained that the stock market was a safe place to put my money. I had taught other people that the stock market was a safe place to keep their money. And I very quickly found that that's not always the case. And so in, an effort to try to figure out how to bring in some extra cash flow if I were to lose my job at AIG, I said, I don't want to leave what little I have left in the market. I'm going to borrow it and I'm going to buy another 4-unit apartment building. And so that's what I did. I took a 401k loan and I used it as a down payment for another 4-unit. And right after that, lending really tightened up. So, at that point, we still weren't really thinking about becoming these, this full-time real estate investor. We were just thinking, how do we cover our expenses and make sure we don't lose everything when the market is collapsing? And real estate, I knew, had some power to continue to provide cash flow. So after that, we decided we wanted more of it and we needed to figure out a way to buy more.
Very cool. And what did you figure out?
Well, it took me some time. It took me way too long to figure it out, Cindy, but I figured out that it was very, very difficult to get financing when you wanted to buy a property, when you worked for a company that was in the news every day on the verge of bankruptcy, and when you had $700,000 in business startup debt for a new business, and when you had nothing saved. And, banks did not want to lend me money. I was a big risk. And, at that time, lenders were hesitant to lend to any real estate investors, even those that did have a balance sheet, because real estate was looked at as risky. And so I kind of floundered for a couple of years trying to figure out how can I find banks to give me money when there's all these properties available that if I could just figure out how to take them down, I could do it. And eventually I got smart enough to not take no for an answer. I learned about creative financing and I learned how to target retiring landlords that needed to save money on capital gains taxes. And I started to put together some seller financed deals on small multifamily properties till I had enough that the banks finally said, okay, AIG is kind of behind us. Your job is stable. You've done a few of these properties, and now we're willing to lend to you again. And once the bank said yes, I knew the sky was the limit. And that's when I really made a decision that real estate is something I'm going to pursue with all that I have to replace my income until I have enough to retire.
Very cool. So it sounds like you've done most of it on your own. Do you work with a team at all, or is everything done on your own?
So in the beginning, Cindy, we worked on our own. We were lone rangers. We did not know what we didn't know. I knew a little bit about syndication, but I had become kind of jaded with syndication because I had hired a coach that turned out to be a fraud. And I just didn't want to work with anybody else. I didn't trust people. A few people that I knew were in real estate were kind of shady. And my husband and I just decided we have too much at risk. We'll just do it on our own. We'll figure it out. And we were really lone rangers for a while. And at the point that I had built up enough in rental real estate, cash flow on just small multifamily units, primarily we were buying a bunch of 4-unit apartment buildings. Once I built up enough income that I could replace my 6-figure paycheck at AIG, that I could have a little bit of a cushion, pay for health insurance, pay for private school, I knew that if I wanted to retire, I could retire safely, but then I needed to scale up and I needed to start creating some partnerships so that I wasn't always waiting till I had enough chunks of cash to take down my next deal. And right about 6 months before I retired from AIG, thankfully I didn't get laid off during that whole crisis, and I left on my own in May of 2019. In August of 2018, I decided it's time for me to start doing some bigger apartment complexes with joint venture partners. And then eventually I would scale into syndication.
Very cool.
I have a couple questions. So Anna, I apologize. I told Cindy you lived in California. I don't know why I thought you were in California, because I told her, I said, Cindy, you need to ask her the question, why is she investing in Pennsylvania if she lives in California? So I'm glad Cindy didn't ask that question, because that would be a stupid question. But I'm going to ask anyway. So, because I do follow you, and I know you invest outside of Pennsylvania too, but you do like investing in Pennsylvania. Tell me what makes Pennsylvania attractive, because we have people all over on this call, and I doubt there are many others from Pennsylvania, and I'm sure someone is going to just chime right in and say they're from Pennsylvania, but I would say the majority are not. And I'm not a Steelers fan, so I'm trying to understand.
You're a Cowboys fan at least.
Well, I am, if we ever play again. I saw somebody's got coronavirus now. But anyway, so tell us what's special about Pennsylvania. I'm curious, because I need to know why I'm not there.
So, you know, I'll say this, there's no place like Texas. So I still consider myself a Texan, even though I've lived 13 years in Pennsylvania. It's a great place to raise kids, but I still love and invest in Texas. And when I first moved to Pennsylvania, quite frankly, Meryl, I thought there is nothing going on here. Like, I'm from a big city in Houston, and I lived in San Antonio. And when I moved to rural Pennsylvania, it was culture shock. It was horse and buggies. And, you know, there wasn't even a Starbucks until the year before I moved here. And so, you know, I thought this is just going to be really hard. And when I found myself in a desperate situation that I needed to figure out real estate, it was interesting because there weren't any real big apartment complexes nearby. Everybody was either a flipper and buying the single family homes, or they had a lot of money and they were investing outside of our area in big cities. And so one of the things that I loved about investing in central Pennsylvania is that when I decided to get into small multifamily units, I was one of the only people that was really trying to take a bunch of them down. So I didn't have the mass competition that you have in major MSAs. And I kind of found the sweet spot of where were there opportunities available that I could take down with the time and the money that I had. And there were a lot of 4-unit buildings, duplexes, 10-unit complexes, but hardly any complexes within 20 or 30 miles that were any bigger than 30 to 50 unit apartment buildings. So I loved investing here because I could make a name for myself and become well known and be somebody that people looked to when they wanted to sell their small multi-units, rather than competing with 200 other offers on every big multifamily deal.
But it's so much fun to compete with 200 offers and have 27 rounds of highest and best. So I'm going to explore this Pennsylvania thing a little bit because it intrigues me. I'm going to guess that the fourplexes like brownstones?
Similar.
I mean, they're older. Are they old? I'm assuming they're an older genre than what you would be investing in Houston.
Yes, absolutely. Yeah. So
I was in St. Louis for a couple of years, and we bought about 3,300 homes over a long period of time in St. Louis. While it's just an older up on the East Coast and upper Midwest. It's just older. It was settled a lot longer. It's been settled a lot longer. But so we would look at the brownstones, and some of them in St. Louis were just unbelievable prices. And it's sad because some of them, at least from the structure, from the bones perspective, were in better shape that were built in 1912 and 1910 than some of this 1950s, 1960s product we were looking at. And you could get them, I mean, this was back in the good days, like 2012, you could get a 4-plex brownstone for like 35 grand. And even if you put 70 into it, you're getting 700 to 900 per unit. And I mean, they were just cash cows. Unfortunately, in Dallas, that doesn't exist. Most of Dallas is, I mean, you get outside of Dallas, there's nothing really older than 25 years. There's an appeal to those fourplexes, and I think a lot of people that are not from or living up there don't understand that they're very lucrative if you get the right pricing.
Exactly.
So yeah, so are you in a small town, or what town are you in Pennsylvania?
Yeah, I'm right outside of the capital of Harrisburg in Hershey, Pennsylvania, where the Hershey
Oh,
factory is, Hershey
my
Park,
mother-in-law,
etc.
my wife's laughing. So my mother-in-law and father-in-law went to Hershey, and I don't think she ever wanted to leave Hershey because she's a chocoholic. But it's like, it is Hershey. So you're not like in the middle of an Amish community where, you know, you've got someone behind you that's on a spin bike, your internet going.
I'm not there, but I'm not too far from there.
Right. I need to order furniture from you guys. You need to hook me up on a good furniture
Yeah.
deal up there.
But it is, you know, every market is so different, Marilyn. And for example, you know, I've been looking at deals in Texas and Houston and San Antonio and Dallas for 18 months. And I've not taken down a single deal as a GP in Texas. I've invested in several as a limited partner, but I can make a much stronger return on my own dollars by investing in smaller properties in, you know, an area like this than I can, you know, competing on some of these big properties. And while I do own bigger properties in Atlanta, and I own some bigger properties now here in Hershey as it's starting to grow, really sometimes the smaller multifamilies in these smaller towns are actually much more profitable for things to own in your own portfolio. And so my goal when I started investing was really build up the cash flow to replace my income. And I could buy a 4-unit apartment building for $200,000, give or take, so about $50,000 a unit. I could get in it with a lot of times 10% down or almost nothing down with owner financing, because a lot of these buildings were owned by mom and pop single landlords that had one 4-unit property and that's all they owned. And so it was my strategy to develop cash flow by investing in my backyard. And also because I didn't have a lot of funds and I didn't have a lot of experience in the beginning, and I was running my husband's business. I had a demanding full-time job and I had 4 kids. I really had to start in my own backyard. And so it was just the ideal environment and town for me to invest in as a small starting investor until I really had the time and built the net worth. And where people kind of poo-poo on the smaller properties, Meryl, I mean, it's the 4-unit apartment buildings that made me a multimillionaire investor and allowed me to retire from the 6-figure job. So if I hadn't started small, I probably wouldn't have been as successful of a larger multifamily operator as I am today.
So I presume you still have small. What kind of are you willing to disclose just the number of small deals you currently have?
Sure. So I just sold several. So because I thought we were heading into a recession at the end of last year, I decided to start selling off some of my properties at the height of what I believed was the height of the market so that I could get liquid to start taking down bigger deals when we hit a recession. So I had 70 units that I owned on my own, my husband and I, of multifamily. I also buy beach house rentals and some self-storage and garages, but I had 70 units on my own. And then I own 200 units as a joint venture with 2 partners that are here in Central PA. And then I've syndicated 2 larger complexes in Atlanta, Georgia that are 100 and 150 unit. So that's what I own, what I have active ownership in by myself or as a general partner.
Okay, so this is going to be a tough question. Do you prefer to own or do you prefer to be owned? Do you prefer to be a GP or an LP?
I like both. I'm invested in about 2,000 doors as an LP and a bunch of self-storage funds as well. And so I look at investing, Meryl, really, and I think this is because of my hat as a financial relationship manager years ago. I really look at investing holistically to say, where am I as an investor today and what's my biggest financial need? And when you're younger and you're starting out, income is your number one most important thing. And you often don't have a whole lot of cash. So we needed income. We didn't have cash. So we had to be very, very active. We had to flip. We had to rehab. We had to put in the sweat equity. And over time, as you build a net worth and you build an income, you don't want to give up as much time and put in as much sweat equity in return for those dollars. So your return on time becomes much more important than necessarily your return on dollars. And so I have things that generate a lot of income where in the beginning it was very, very active. And now most of my properties, because I rehab them correctly, are very, very passive, like 90% passive. You couldn't pay me today on a small property for my husband and I's portfolio to go in and do all the hard work and rehab. I'd rather pay someone a little more to do it or buy turnkey and save some of my time and deploy some of that money passively. But I am very actively investing in my own deals. I'm very actively putting together larger syndications, and I'm very actively taking some of that money and investing it in other people's deals so that that money is more passive.
That's so I've seen one of your beach houses because you posted some pictures. You escaped recently to a beach house. Not sure which beach it was or what city, but so is that like an Airbnb for you? I mean, it may not be an Airbnb, but that type of setup?
So this will be my third beach house property in Ocean City, Maryland. One of them is purely an investment. So I bought it as an auction, and I bought it very inexpensively with the purpose of, putting tenants in there, creating a cash flow, and then having a lot of upside. So I bought it more for the upside with cash flow being a benefit, because it just fit in that appreciation bucket, which is one of my buckets. The second property I bought was a second home. And so when you buy a second home, you really are buying it primarily for the benefits. But as an investor, I'm not going to throw out a bunch of money just to have a luxury item that I'm going to go to every once in a while. It has to make sense as an investment. So I cash flow on it, but I only make, on a $600,000 beach house, I might net $10,000 to $20,000 a year on a really good summer, but I'm enjoying it all year long, right. Lots of weekends or whatnot. So I didn't buy it primarily for the cash flow, like primarily for the Airbnb model, but I do Airbnb it to cover our expenses by renting it out for 10 or 11 weeks a year. And then the one that I have under contract now, I'm just upgrading and moving up from the 5-bedroom house to the 6-bedroom house and being a little closer to the water. And by renting it out, I'll make $75,000, $80,000 a year that'll cover the cost of me having a really nice luxury home.
Right. So I'm curious. So you didn't want to pick up a beach house in Galveston? The lovely
I'm hunting for one in Galveston.
Are you really?
Oh, I really am. So this is really interesting. So again, I know we're, mostly I'm a multifamily investor, but again, I'm really agnostic as to the type of property I buy. I say, what is my goal? Is it income growth or appreciation? And do I want some diversification?
Right.
And what are the opportunities and asset classes in the marketplace today that are going to help me move the needle? And right now, when I saw the recession was coming, I had already been looking pretty actively for about 9 months, but I'm a very patient investor for the right property in Galveston. So being in Houston, I was able to just drive to the beach every day during spring break and all the summers, and I never had to even think about renting a beach house. So when I decided to try to rent a beach house in the Northeast, I could not believe that people paid $3,000 to $5,000 a week just to go to the beach. It just floored me. But the thing that even surprised me more when I wanted to buy one is that it's still pretty cold here, even in the first week of June. And so you only have about a 10 to 12 week rental season that you can really rely on that rental income. So when I started studying short-term rentals and I really wanted to buy something in Texas, I pulled a report from rented.com, and they publish every year the most profitable places to own short-term rentals. And I found that Galveston, Texas was actually the #3 most profitable place to own an Airbnb rental in the entire United States. I was pretty surprised because I grew up there and didn't think it was that special of a town. It was just a place to get to the water. But ever since then, I've decided I want to buy some more short-term rentals, only rentals that are on the beach. And I have my own reasons for that as an investor. But with COVID happening, we've seen a spike, as I suspected, of properties being dumped and people trying to sell their second homes. And it's because they may have lost a job or their business is shut down. And a second home is a luxury item. And so we are starting to see a flood of properties come on the market that people are having to sell. And I'm just waiting on the right property. But I've been doing market research on Galveston and talking to brokers and agents and looking for the right property for about 15 months. And I'm about to pull the trigger on one there. But I found the one in Ocean City first. And since it was a second home, I'm going to take that one down first and then move to Galveston.
So it's funny you say that. So, we talk about, or I talk about a lot of different real estate. We've done single family, I've done hard money lending, I'm in multifamily. We've got mineral drilling in Arizona for helium. We have some farming, indoor farming in Oklahoma, where it's legal to indoor farm in Oklahoma, all sorts of different things. And so Cindy and I have actually talked about recently a couple Airbnbs, and she was looking at a place out in Cedar Creek, which is literally just a tiny little lake. But the reason I bring it up is we've gone to Galveston a couple times, and we've looked at trying to book something in the past, and it's exactly like you said. It is shocking, number one, what you pay for what you get.
Yes.
And it's Galveston, and those that aren't familiar with Galveston is brown water. It's a brown water Gulf of Mexico. But the reality is when there are 29 million plus of us crammed, I say crammed in the second largest state in the country, but crammed, in these big MSAs, and other than Houston, none of them are near water. There's something appealing about going to the beach. And I grew up, I'm 51 years old. I remember going to Galveston from Dallas. My parents would do a road trip, and it was like the best thing ever. And as a kid, water's not brown. Water is water, and a beach is a beach. And if I wanted to go to Galveston right now, even with COVID, I haven't checked recently, but like last year we had looked into it with some friends. There's nothing available.
Right.
And I mean, literally nothing, unless you're buying a little tiny one bedroom. You're renting a one bedroom in some condo development, which is not what you want. You want exactly what you're talking about. So when you talk online, if you find some interesting deals, Galveston is great. I would like Galveston. They have these little twisty things that come around every once in a while, but that's what insurance is for.
Exactly. And the beauty of a place like Galveston, Merrill, is even when you have a recession, even though your prices of short-term rentals may come down for a while, if you're playing the long game of an investor, you can ride, waves of up and down in terms of the value of your property. But what happens in a recession is people no longer have the money to take big trips, like to go to Europe or to fly to another state. And so they will just compromise, and they'll take a cheaper trip by driving to the beach a few hours. Everyone wants to get away to the beach. They can cook inside. They don't have to necessarily spend a lot of money. It's a fairly cheap vacation. And so beach rentals actually increase, and the rental rates that they get increase during a recession. So it makes those investments much more profitable at a time that you would think that, hey, values are coming down, I better not buy anything. It's actually the best time to buy when values are down. And because it's so hot in Texas, your rental season goes from March through October. So you can buy a beach house for almost half of what I have to pay here in Maryland, but your rental season is literally 6 months of the year, sometimes 9 months of the year. So you're just creating so much more cash flow and paying so much less for it that it becomes extremely profitable if you can get past the insurance and the risk that it might blow away.
Right. Right. Yeah. I mean, this conversation is not just multifamily. It's kind of like all things real estate. And I can tell you from personal experience, looking to find a place when we didn't want to go on a trip, looking during Thanksgiving, Christmas, New Year's, 2 weeks after that, it's booked. And your kids, when they're little, they will go in the 70-degree water. For where you live, 70-degree water is probably like summertime. For us,
like heaven.
It's like going ice fishing. Our lakes already are 88 degrees. I have a boat at the lake, but it's funny you say that. So it's not just the recession, it's also the COVID, I call them protocols, where, people are not comfortable getting on planes. A vast majority aren't comfortable getting on planes. They're not comfortable going to a hotel where people are moving in and out. And so you're talking about Airbnb. Cindy was talking about it too with me actually yesterday and this morning. And then my wife and I were talking we have a nice boat out at the lake here, and we normally travel all the time, and we're not for obvious reasons, but we're going to the lake every weekend. I'm talking to the boat dealer there, and I'm joking around with him like, oh, it must be kind of slow. He said they are sold out of every boat under 30 feet. And if you're not a boater, that doesn't mean much to you, but those are typically lower priced boats. And so like pontoon boats, there's nothing wrong with pontoon boats, but normally dealers have thousands of them. They are gone in Texas. It is hard to find a pontoon boat and jet skis because people have decided I'm not going to be able to take a $15,000, $20,000, even $10,000 trip or go stay here for 3 or 4 months. What they're doing is they're looking close to home, exactly like you said. They're either buying boats, they're looking at lake houses, they're doing Airbnbs. Now, I agree with you 100%. I have clients and friends that have Airbnbs outside of the United States, so that's a little bit harder, but I still believe those are going to come back. Travel will come back. We'll find a cure, antidote, whatever we want to call it, to what's going on. It just may take 6 to 12 months before that happens. But I agree I think there are some phenomenal opportunities out there. I personally am way too ADHD to have the patience that you have. 15 months, I would have killed myself. But you would have been buying at a better price than I would buy at.
Well, it was height of the market. And that's the thing. As an investor, you have to be able to watch market cycles and say, am I at the height and getting ready to come down? If I'm at the height, I'm selling. As much as I love real estate, I'm selling. Yep. I'm getting a bunch of cash. And once I start coming down, that's when I'm like more serious about, okay, I'm going to really take something down. So I was looking before, but I was only looking if I could find a killer deal.
Right. Yeah. I mean, and then you factor in the tax benefits that we have, at least currently. I mean, those are great opportunities. So we've learned, one, you're not from California. You're bullish on Pennsylvania. And we have a lot of clients that are actually investing in Ohio too, which I know it's not the same, but it's like Canada to us in Texas. Anything above Amarillo is just Canada. So it's nice you guys are investing and living in Canada. But I like the fact that you guys are well diversified. So I'm going to ask you, because you're a mom and a wife, and I guess it doesn't make sense to ask you, how does it feel to be a woman in I might say predominantly male industry, because after listening to your prior career, you dealt with that way more than you're probably dealing with it now, if at all. But we do have a lot of ladies on the call, and some that want to get into the business. And, if there's like some helpful insight, or, just keep going and ignore the crap, it would be great. That was actually Cindy's question. I feel bad.
I wanted to jump in, but hey.
Cindy's going to jump in, and Cindy, finish the question.
I will, Anna. So what challenges have you faced being a woman in real estate, being a woman in, like Meryl said, kind of a predominantly male-oriented business? Any special advice for women as far as getting in this, staying in it,
Sure. I think it's like anything. And to Meryl's point, I was in the corporate world for 25 years and it was mostly men. And so, I dealt with the fact that, women are not necessarily treated the same. We don't necessarily have, make the most money. You have to prove yourself more as a woman, unfortunately, than you do as a man in the corporate world and even in real estate. So I think, people look at women as, they've probably just been at home and they've probably just been raising their kids, and they don't necessarily automatically look at you as somebody that is smart and that has knowledge and competency. And so you just have to spend more time proving yourself and proving that you are intelligent and that you're competent. There is some sexism that happens, and you have to learn to get tough skin. The reality is, yes, I'm going to be hit on. Yes, I'm going to be called sweetie baby. Yes, I'm going to have contractors that ask to talk to my husband because they don't want to talk to me. Or, I'm still dealing with it. I mean, I own some, $10 million complex, and I hired a landscaper, and he gets mad that he sent me a bill for double the estimate. And when I call to challenge him and say, talk to me about why it's so much more, it's immediate defense. He wants to talk to my husband. So one of the things that you have is that if my husband were to tell a contractor, it's not acceptable for you to bill me 50% of what on top of what you said, and no, it's not okay that, you're going to be another month longer. I could say it with a smile on my face and as sweet as can be, and they're going to try to walk over me, or they're going to think that I'm a witch and I'm challenging them. Where if my husband can say it, be ruder, be more demanding, and he's going to get respect and get the guy to act. So that's just a reality that doesn't really go away. So those are kind of some of the challenges that you have as a woman. But really what I've learned is that if you take every challenge and you get defensive, or you cower in the corner, or you say, I'm just not going to do this, or it's too hard, you won't grow. And so for me, I've learned to use being a woman to my advantage. And one of the things that I love that has really helped me in my investing is that I am able to build rapport with sellers much easier. And so if I have somebody that has an off-market deal and they're getting letters from 10 guys that are showing up that want to, show up and be macho and undercut their price and pay them, take blood out of a turnip, I can come in and say, "Hi, Mr. Seller. It's nice to meet you. I want to create a win-win situation. Like, I'm investing in real estate because I'm a mom and I want to stay home with my kids. And I'd love to be able to help you and not take advantage of you, but see how we can figure out a deal that works for you and I both." I have an immediate trust factor, and I've had older gentlemen tell me that they feel like they can trust me over my male counterparts who are trying to compete for the same deals. I had a $10 million property that we just bought where the seller had a bunch of offers, and he was like, "I like you and I want to help your family." And I started out once too. And I won the deal, I think, because I was a woman and I had that personal touch with an intention to build rapport and not go in and just immediately be all about the numbers. So those are some kind of pros and cons, I think, about being a woman in the business.
So you need to stay out of the markets I'm looking at, because there's no way I could have that discussion with a seller. I'm just not, I can't be that nice. But it's funny, Cindy, I put Cindy on mute only because her phone was giving feedback. But you can't tell, but I would say over 70% of my office is women. And while my name may be on everything, the reality is they're all telling me what to do, which is fine. And I have found in business, as well as in home, look at my wife who's giving me an evil eye. Where am I going with this? Women by nature are far more organized and able to multitask. And it's not a sexist comment, or it's not intended to be. I have two adult daughters, but they're able to multitask far better than men are. We tend to get more aggressive and go after the deals. Like I said, I cannot wait 15 months to do anything. But that's just me. But it's interesting. And as you said, they will talk to your husband differently sometimes. I do the same thing with Cindy when we're talking with a new client and I see them not making eye contact with Cindy anymore. I just leave. I just get up. I'm sorry, I got a phone call. Either they're going to talk with Cindy and we're going to represent them, or we're not going to represent them, because you should be able to talk to anybody. You should get everybody the same exact respect, no matter, what they look like, whatever. So that's like a huge pet peeve of mine. And sometimes I'll even have an admin or a paralegal in there. And I'm the same way. If someone's in there with me, and especially if it's a woman in there with me, if they're not making eye contact and talking to both of us and just staring at me, I'm not really that interested in anything they have to say anymore. So I'm glad that you talked about that. One day I'd love to meet your husband. I'm assuming he's still practicing, right?
He is, but we're about to retire him because real estate is just so much more lucrative.
I have a feeling, though, that you're the one that controls the real estate or makes most of the decisions. Would that be correct?
Yes, it is.
Okay.
We're complementary. I mean, he's a very good doctor and he's a very laid back guy. He's a great husband. He's great with the kids. He hates business. He hates marketing. He hates numbers. He doesn't know anything about the day-to-day of how to look at our finances. He trusts me with that. And so we make a good team where he trusts me to say, if I feel like it's a good deal, he knows I'm going to make a decision. The only time that he really has said absolutely no is in the beginning when I wanted to buy stuff that he had to be the one to rehab. So yeah. He likes working with his hands, but he doesn't want me to tell him what he has to do, on those properties. So, I'm just the more numbers-minded person. I'm the more financially minded person. And I love real estate. Like, it is my passion, what it does for us, what it does to change people's lives, what it does to allow me to change the lives of communities that I invest in. I'm just passionate about it, where he's kind of like, he loves the benefits of the passive cash, but he really doesn't want that much to do with the day-to-day.
I like him. I like him already, and I haven't even met him. Yeah, so I've got Cindy back on. So Cindy and I are both curious. Where do you think where do you think the market's going right now with everything that's going on? And I know that's a pretty broad question because it's clearly based on geography as well as economics. But are you still out there looking for deals, or are you waiting 15 months to get another deal? You want to see what the market's doing. I'm not trying to be facetious with the 15 months, but
Sure.
are you more of a I want to wait and see where it's going, or are you in the mode where there's some opportunities that are starting to pop up, obviously on the Airbnb, that makes sense, or the STRs, short-term rentals, but like with respect to multifamily and storage, are you actively looking for deals right now?
I am. So I'll say that first. I'm always looking for deals because I think you can make money in every market cycle. You might just have to adjust the types of deals that you go after, the strategy that makes sense for that market cycle, and the different risks that you're going to have in an up cycle versus a down cycle. So I learned a lot, obviously, from 2008 and 2009, and I was caught not understanding broad economics and not understanding market cycles, even though I understood, investments pretty well. And so I learned to really watch the economy and really watch the undertones of the things that were happening that could impact my finances and that could impact more that I couldn't mitigate than the number of things I could mitigate. And so one of the things that I've really looked for in the last several months since COVID, as I, spent most of my time, Meryl, just trying to manage the assets that we had and, to get through and make sure that we were going to be able to, maintain the properties, collect our rents, pay our investors. It was a lot of fear of what are all these unknowns, and every day something was changing. You think you know what's happening with lending. You think mortgage servicers about to go under. You think there's going to be this mass wave of foreclosures. And then the Fed pulls out all the stops to stop the bleeding at every single inflection point where things are starting to shift. And so a few months ago, I thought we are going to have another major crash bigger than the scale of what we saw in 2009. And we are in a recession. We're officially in a recession. I thought a recession was coming before COVID. And so I really believed, based on all of the underlying fundamentals of things I was seeing in the market that maybe don't get a lot of media press, but that I just tracked overall about the economy, I believed we were going to head into a recession and that it might last, like most recessions, 15 months, 2 years, something like that. And so I started doing things like avoiding bridge debt. If I'm going to be in an up market where we're growing and I know that values are going to keep going up, rents are going to keep going up, I can do a value add strategy all day and know that, hey, in a couple of years I can refi and get out. When you're approaching hyper supply in the top of a market, you have to start thinking the market's going to turn. We were in the longest expansion period in our country since President Abraham Lincoln was in office. So I knew I'm not going to be banking on things that I have to sell or refi quickly in the next year to 18 months. So I started moving away from the heavy, big value add deals and looking more for stable buy and hold deals with long-term, low-rate fixed financing. And so those types of things thankfully served me well coming into this economy. And I think that we are in recession and that we will be probably for the next 18 months, 2 years. I don't have a crystal ball. I do realize, like you showed at the beginning of the presentation, that the unemployment numbers are improving, that there are more jobs created. But at the same time, there's still a lot of unknowns. And there's still a lot of things like, my question is, all these people that got PPP, did they rehire a bunch of people because they had to so that they didn't lose the PPP? And are they really going to keep those employees employed? Then I see things in the news of major corporations figuring out we've got to get leaner and starting to announce job cuts on the scale of 20 to 30%. So I think that there's still more pain to come because companies are having to tighten up and in preparation that we could have another wave of COVID or we could have things go poorly again. So I think we have to be cautious, Meryl. I think we have to be realistic that this is not going to be an immediate bounce because we had so much pain and so much layoff because of COVID and so many businesses shut down for so long that I think the pain is going to take a little bit of time. But I think most of the unknowns and things we were afraid of about, what is lending going to do? Are we going to be able to get loans? A lot of those things have started to kind of settle, and some of the tightening we saw started to loosen up a little bit. So I think that it's going to be easier to find deals and harder to find money for a while, very similar to what it was after 2009 in terms of traditional financing. So if you're doing big syndications, you'll be able to do agency debt as long as you are a very well-qualified buyer, you have a strong net worth, you have experience, you have some liquidity. Marginal deals, I don't think are going to be able to happen for a while. And I think that you're going to see some softening in prices and some tightening in lending for a while. But again, it's very market dependent, Meryl. Like you said, there's certain areas that are hit harder, both in terms of the businesses that were shut down, the number of businesses that are in impacted industries, and whether they were in hyper supply going into COVID or whether there was still a strong demand compared to supply before this all hit.
Oh, I'm with you on every point. We had last week, we had Julie Patterson is with a group called Old Capital. And I don't know if you were listening in or not, but she had a lender from Wells Fargo, senior VP, who also does agency debt. And it was very interesting to hear him talk about, so you're right, things are loosening up. And what I tell some of the clients and for ourselves as well, deals that actually didn't look that good right before COVID, some of them actually look better now because financing is better. If you can get over the reserve issue, I'm a long-term financing person. I'm looking for 10 to 12-year debt right now. I can get up to 5. We just got quoted 5 years IO on a 12-year Fannie at like 3.32 or 3.23. It was 3.23%. And they're still loaning at 72% of value, but it's what they would call tier 1 market. I can't go to Amarillo and get the same property. Well, I can get the same property, but I'm not going to get that financing. I'm not going to get that loan to value right now because they don't have the same confidence. But it's interesting. Some deals actually look good. We see a lot of clients that have bridge loans, and those bridge loans are due. Unfortunately, those that got bridge loans, they're not getting their 1+1 extensions. The bridge lenders they're done. Everybody's supposed to read their documents initially, but it's subject to the bridge lender's discretion to give you extensions, and they price them where they can take them back if they want to. So we're seeing some interesting things there. Listen, I really appreciate you being on, and I told you I wouldn't do this, but I want you to. So you also have a mentoring and education program. It's not one of those massive programs where you are mentoring hundreds and thousands of people. I don't think that's even your style. I think you take on very select people that you feel you have. We haven't even talked about this, but I read through your profile and I read through your website. So I'm feeling like I'm putting words in your mouth, but this is kind of the way I saw it from your website, that you're selective on what you do and clearly very knowledgeable. So I've never had somebody on to promote education like that. That's kind of not what we're about, but I told Roxy, who's our marketing director, that, we're going to make this video available for everybody, and your information or contact information is out there. And you do have a ton of information and a ton of experience. And I don't say any of the experience is bad. That's why we call them challenges and wins. A challenge just makes you stronger. It's funny. We bought 9,500 homes and, 3% were duds. Of the 9,500, 3% of 9,500 is, it's like 295 homes or 285 homes. Sounds like a lot, but not a lot out of 9,500. I stayed up every night worrying about the 3%, and the 97% were doing just fine. Why did I worry about that? Because I had huge private equity firms that didn't care about me and never focused on how well the others were. It was always focusing on the negative. You seem very positive, which is exciting. And that's kind of why I wanted you on here. I follow you on Facebook, and you have a nice, at least outwardly appear nice work-life balance. Stuff always comes up. We all know that with real estate, but I do want you to put something together and, for Roxy to put with the video, it won't come out till tomorrow to everybody, about your program. And if you want to spend a minute or two just talking about what you do, you're welcome to.
Sure, great. So yeah, I do have a coaching program, and in fact, I've done a few clients, per year, and then I kind of shut it down right after I retired because I really needed to just focus my time. So one of the things about being, a consummate entrepreneur and very driven and wanting to keep, growing and accumulating is I've got so many things to say yes to now that I retired, and so many things I'm passionate about that I've had to kind of figure out that work-life balance and figure out, what do I have the bandwidth to do and what's the highest and best use of my time. Coaching is never going to be where I make all of my money. I'm never looking to have some massive coaching program where I have coaches underneath me. Coaching really for me is about, giving back and really helping and empowering other people, and especially women, to really create financial freedom and change the financial trajectory of their lives through making wise financial choices through any sector. So right now I'm doing a multifamily session and really talking about investing in small to large multifamily deals. And that's where my coaching is focused right now. But I also coach people to just, whether you're a newbie or whether you have a lot of experience and you just want to take your finances to the next level and find the types of deals to marry what your investment goals are with the types of opportunities that are out in the marketplace today. Then I take one-on-one coaching students and really walk you through in a very customized way into how to marry those opportunities with your skills and your time and your resources to meet your financial goals over time.
That's awesome. So I don't know if there are any, I was looking through the chats. Cindy, did you see questions in there? We covered a lot.
We did. Let me, I think mostly it's introductions.
All I keep seeing is Anna's phenomenal.
Yeah.
Anna's great. Meryl's so lucky that Anna actually attended the show. So apparently we'll switch it over. It's the Anna show. And just for fun, we have our own marketing team, and we actually do marketing for other investors and funds on a consulting basis. So Rob was creating some really cool graphics for Anna, and I don't know Anna that well. We haven't really talked, but I'm always cautious because Rob and I have a funny sense of humor. And so we created a couple, he created a couple ads that I ran, to let everybody know what's going on. And what was it? Deals in high heels or something like that. The first one, and I'm like, oh, that's going to be offensive. And Anna liked it, thank God. And I think I said, hey, please tell me if you don't like this ad, because this is not like what I see on your website. And then I think he created Supermom for today. And I think you like that one. He's never done that for me, Anna.
I liked it because I look so skinny. I look like a real superhero. And you had my actual face with a really nice and skinny body like I had when I was 20, but not at 45.
Well, if you know, so that was like a doll too. Did you see it was like a doll? So we're actually creating Anna dolls also. So, like with every investment, you can give away an Anna doll that answers questions. I'm joking around, but you're a good sport with the marketing, and obviously you can use those if you not to embarrass
I
you.
love the high heels. So it's funny you don't actually know this about me, but I love to wear jeans, and I have red high heels and a red perk. So I like to do deals in heels.
That is hysterical. That's Rob. Rob is about as right-brained as you can be. And I let him go with it as long as it's okay. But I shared some of your responses with him. He loved it. Listen, thank you so much for coming on. I know you're busy person, and we'll let everybody get a copy of this. It'll probably be tomorrow. And Roxy will reach out to you to get whatever information you want to get out to everybody. And again, awesome, and keep going. You're a great inspiration.
Thank you, Anna.
Thank you so much. It's been my honor to be here, and anytime I can bring value to your audience, just let me know.
That's awesome. Thank you, Anna. Thanks everybody for listening.